Welcome back to Trading Hour on CNBC-TV18. Now let's bring on board Pawan Parakh, who's from Geojit Financial Services, joining in with us to discuss the market fundamentals, his top sectoral bets as well. Thank you so much, Pawan, for joining with us on the show, and good morning to you. Firstly, let's start with obviously the domestic market. How are we seeing that overall? Now, we're seeing a fall coming in the markets because there's a lot of global uncertainty that is going around as well. The Trump tariff issues, it's a bit of a jitter. Today, yes, markets are managing to hold on to gains, but fundamentally, domestic economy, how are you seeing that move now from here on?
Yeah, hi, good morning. So very clearly, I think domestic economy is, on gradually improving. Fundamentals are clearly improving. And the good thing to note out here is that now that election campaigning is all over, results are all done with, government along with RBI both have sprung into action to revive the economy. We've got rate cuts, we've got liquidity announcements, we've got tax cuts. And I think some more is there in the pipeline. So very clearly, I think domestic economy is back gradually on the way up. And to support the domestic economy, I think some of the other factors that I would want to say that despite the depreciation, INR depreciation hasn't been that very steep, and crude oil prices have now actually fallen. So take a 6-month, 1 year, 2 year view. I think I feel more positive about the growth sentiments than 3 months back. But having said that, from a market point of view, I think global scenario will keep markets on the edge. Tariff, no tariff, fentanyl, no fentanyl, trade war. I think these are things which will remain in to dominate the sentiments at least for next 1 or 2 months. I think Trump has been in action for last about 45 days or so. I think after 1 or 2 months, market will get a clear sense, as to in which direction eventually the policies will stabilize. And I think that is when next 1 or 2 months market should stabilize, and then gradually I think you should see a sharp up move in a lot of strong, heavily beaten down stocks.
Pawan, hi, morning. One of the casualties of this Trump tariff uncertainty has been Indian pharmaceutical companies, and many of them, have fallen quite a bit. How are you approaching pharma companies in the fall? And which is the pocket in pharma that you like right now?
Right. No, I think very clearly, in fact, in our portfolio also, we've been overweight pharma. Some of the stocks have actually fallen. But we are actually completely unperturbed with whatever has happened on this potential tariff thing. Very clearly, in terms of volumes, 45% of generic imports into US comes from India. Very clearly, irrespective whether the narrative from the US government is there, but I think very clearly in last 5 years, a lot of the large big pharma in US have also realized that they want to diversify out of China. It's a slow, gradual process, but take a 5-year view, it's positive India. So I think very clearly there's a lot of noise around pharma. On ground, if I were to see, I don't see any concern out there at all. If at all, I would view it positively, because if inflation was to be brought under control, if spending is to be brought under control, generic pharma from India only helps that cause. So I don't think, just because of the narrative, you should set into this story. In fact, in this call, we've added more. What we've actually done is that we've started avoiding domestic pharma names because we think valuations are very high. On the contrary, some of these US-dominated or global-heavy businesses, be it CDMO or domestic formulations, those look pretty interesting to us.
Right. Pawan, one more thing that I want to also highlight, while pharma obviously does manage to look interesting, and despite what the fears everyone has around it, do you see earnings growth coming back in Q4, or do we have to wait for a couple of quarters? It's not been that exciting, right, on the India front. On that front, as well as on the real estate side, do you find that interesting as well as a bet? Because real estate also has seen a sharp fall coming in terms of stock-wise. So anything that you would look from the Nifty Realty side?
No, very clearly, I think on the real estate, it's a high beta sector. We all know, and it works high beta both on the way up and way down. That's the nature of the beast. And I think that's what happened. I think real estate has done extremely well in last 3 years. Stocks have grown 2, 3, 4x. Right. And now when the chips are down, obviously these stocks have to fall. Having said that, I must tell you, that last 3, 4 years, there's been a clear trend of shift from unorganized to organized. In fact, that trend actually accelerated ever since RERA got implemented. And I think, that trend will further accelerate in next 5-10 years. And that makes a lot of these real estate companies pretty attractive. I would rather believe that either you should buy companies which can potentially grow very fast, or then you buy companies which are more, say, MMR dominated, because historically we've seen that MMR is far more stable as a real estate, uh, both price and volume wise. It's a far more stable business than, say, NCR or any other regional market in the country. So I think that is how we position ourselves in the real estate side. There's a way you can play real estate is through building materials, but again, there, that space doesn't really excite us, because there's a demand supply mismatch in every subsector of building materials. So we are actually, so this entire building materials real estate theme, we are playing it through one or two real estate names in our portfolio.
Thank you, Pawan. Short conversation today, but an interesting one as always. We will slip into a very short break on that note. But as we do that, here is some good news for all our viewers. India's business news leader is now just a click away. We're introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the app now from the Apple Store or Google Play Store, or you could just scan the QR code on your screen.